Maybe for re-rating from the sides of rating agencies, would you go and or maybe there is possibility?
I don't think, let me put it this way. We have not taken any of these actions in anticipation of any response from any rating agencies. I think rating agencies do what they do, we do what we do. If independently they decide to do something, that's fine, but there is no eye on the rating agencies. These steps have been taken because it is financially prudent for us as a country to have our debt under control, so that our interest payments are under control, so that we have resources to spend on things other than interest. Because if you overborrow, you run into an interest payment cycle where you'll spend more and more of your budget paying interest. So it's not desirable for the country in itself to have very high fiscal deficits. Of course, they may be required at certain points of time when the economy needs it, but it's not something that is done for the sake of rating agencies. It is prudent for oneself as a nation that we should have a prudent level of fiscal deficit, so that a greater share of our budget is available for the public and not to pay as interest.
And sir, if we talk about the concessions which have been given, definitely this time for salaried individuals from custom side, sir, the revenue foregone now, how will that be brought or maybe earned or
so
back?
As was explained in the speech, revenue foregone is, I think the figure is about net 7,000 to 8,000 crores of revenue is the expected loss. That is something which is within the range of what could be recovered through slight changes in growth or better administration, etc. That is why we have not specifically factored these into the tax numbers, because there are some increases and some decreases. The net effect is there, but it's not so substantial that we have altered the expected revenue numbers. And so, on the other hand, our revenue projection is based on a reasonable assumption of GDP growth. So if there is any, I don't think there is much downside on our revenue numbers from a growth perspective. But if growth is higher, it may go up slightly. And if that happens, then this would be easily made up for.
And one quick question on the LTCG and STCG. Will that, in a way, in the morning spooked markets, what was rationale behind and going forward?
So first and foremost, simplification. You see, we had a very complicated structure. Some things were at 10% without indexation. Some things were at 15%. Some things were at 20% with indexation. Some were for 1 year, some were for 2 years. Then some listed things were for 3 years, like REITs and InvITs. So it was a very hodgepodge scheme of capital gains taxation. And there was a very consistent request from a lot of experts, industry, saying that we need a more rational tax code for capital gains, and that it needs to be simple and not so distinct between different classes of assets, which creates distortions as to people's investment choices being made, not because of the inherent characteristics of an investment, because of its tax characteristics, which is not a good thing from an economic point of view. People should make investment choices based on the risk and return characteristics of a particular investment, not necessarily based on its tax treatment. But since the tax treatment was so varied, it was a policy desire to make it as simple as possible, rationalize it, and that we have achieved, in the sense that now all short term is at 12.5 without indexation, all long term is at all long term is at 12.5 without indexation, and short term, most cases are at applicable rate. Only for listed securities and a few others it's at 20%. So the increase in short term also has a policy objective. You saw what the economic survey said yesterday. We are not very much in favor of too much of speculation. Investment is different from speculation. Speculation is a necessary part of a stock market, but it's not the part of the stock market that one wishes to encourage from a policy perspective. So these were the objectives. So rationalization is the primary objective. There is also a tax increase involved in the listed equity sector, but I think it's a very moderate increase, which brings all the rates into alignment, and it is something which I think is very, very reasonable compared to the other rates of tax in our economy for other kinds of income, and the rates of capital gains tax in other economies. Right. So it's a very fair rate, and I think this is a rate that will combine simplification with revenue neutrality.
Right, so thank you so much for talking to ET Now, sir. Thank you so much once again for talking to us, sir.